Morning, everyone. Aiman here. Welcome to Morning Cup at 8. Happy Friday. If you look at the S&P 500, the index went up marginally by 4 points to close higher at 6,363 points, well above the 6,300 resistance line. The index now is lower at the lower channel of the uptrend channel and may have a potential rebound further in the coming session. We believe the sentiment is positive right now, lifted by investors' confidence. By some of the earnings result from the Max 7. If you remember, big trade negotiation remains the key. As such, we expect that the S&P 500 to remain bullish at this juncture. Now that the index has broken 6,003, it may travel higher towards the 6,005. Also, if you see the SMA has experienced a crossover, which tells us that the underlying momentum remains intact. Right, moving on to the Hang Seng Index Futures, HSIF, the index has continued to print a positive price action. Yes, on yesterday's session, riding on its bullish movement, well, adding 111 points to close at 25,860. So, forming a higher high, which continue to reinforce the bullish momentum of the market. Sentiment right now continue to be positive as the overall Hong Kong China market went up on early signs of easing US China tension listing. This is after Trump said to finalize the trade deal with China this week. Also, we keep our positive trading bias unchanged for now. We expect to see the market to reach the 26,000 point level if the bullish momentum to follow through in the coming session. Well, for now, at this juncture, if any pullback to happen, we expect the market to retrace towards the psychological level of 25,000 support. Right, moving on to the WTI crude oil price, it has snapped the 4 days losing streak yesterday to add 78 cent US dollar to close at 66 US dollar. So in terms of sentiment, we believe the market was positive, further uplifted by the lower in crude oil inventory. Also optimism surrounding the Russian energy sanctions. So for now, we still expect to see the market at least remain steady at 66 US dollar level following the market structure. We maintain our positive view on this WTI crude oil futures. So coming back to Malaysia, looking at the FKLI here, it has extended its rebound yesterday to test the 200-day moving average, as you can see here, but remain capped below 1550 points level. So we remain our negative trading bias as long as the index continue to trade below 1550 level. So at this juncture, we are still observing the 1485 support level in the coming sessions ahead. So we believe yesterday's sentiment was renewed investors' confidence towards the economy. For now, we still observe for the further market development. Also, if you can see the fund flow, the foreign funds are now in the net position, supporting the market recently. In terms of the sectoral performance, day to day, yesterday top gainers was coming from the industrial production, went up by 1.8%. with consumer at the second place at 0.93%. So if you look at our watch list, we have highlighted some of the counters that may have experience for a potential breakout like Penta. Also, we have Vitrox, and we added Star and also IT Max, also IGM. Right. So for our Malaysia trading stocks for today, we have Opstar, as I mentioned just now. So the Opstar is now eyeing for a bullish breakout above the 51 cent, supported by the strong trading volume. If you can see here, we expect the momentum to maintain and climb further to test the next resistance at 55 cent level, followed by 59 cent level. So if you happen to break out below 47 cent and form a new low, this could indicate initial near-term pullback. So next we have ITMAX system. So the stock has breakout above 4 ringgit level. So should the momentum hold in the coming session ahead, the counter potentially testing the next resistance at 4 ringgit and 15 cent, followed by 4 ringgit and 30 cent level. So if it dropped below 3 ringgit and 80 cent level, this would open the door for further retracement or correction phase. Next, looking at the FCPO here, futures crude palm oil. So the commodity underwent a positive, I would say, follow through bullish momentum from the previous session, adding 15 ringgit to close at 43.30 ringgit. So we still maintain our positive sentiment on the commodity as it continues to trend further upwards. So looking at the charts, however, the broader technical setup here, we do not discount for any pullback to happen as it is now trending at the upper uptrend channel line. So if the commodity to give up and experience pullback, do watch out for the 4,200 support level. Right. So happy trading, everyone. I think that's all from me, and I pass to Wei Siang for his company update. Thanks.
Okay, thanks, Aiman. Morning, everyone. Let me continue with two reports on in the consumer sector. Let me start off with results review on Nestle. Nestle reported their second quarter results yesterday, and essentially we consider the results as above expectation after meeting 54 to 60% of our and consensus forecast. We are upgrading the stock to buy as we anticipate a more spectacular or visible earnings recovery in second half, premise on a few factors. Firstly, second half 24 earnings base will be a low one if you look at the trend of earnings last year. So in terms of year-on-year comparison, it will be more favorable for FY25, which is the next two coming quarters. And the second quarter top line growth could suggest a demand normalization after the very weak trend over the last few quarters or in last 1 year or so. And that is the first quarterly top line growth or quarterly year-on-year top line growth that they have reported since fourth quarter 23. So that could mean that now demand or the sentiment on Nestle brands are probably normalizing or improving after the efforts Nestle has put in. Thirdly, favorable commodity price trends, key input or key raw material of Nestle, including coffee, cocoa, wheat, sugar, and to a lesser extent milk have come off from the previous high levels, and that should translate to margin expansion probably as early as second half. So to reflect the improving earnings and demand outlook, we tweak our risk assumption to arrive at a new target price of 95 ringgit. This will imply a forward PE of 34 times, still below Nestle's 5-year mean. We upgrade the stock to a buy. We think the comeback is timely given the increasing investor appetite for defensive stocks amidst uncertain market condition. So all in, we upgrade Nestle to buy from neutral with a new target price of 95 ringgit. And let me move on to the next report, which is an initiation report on EcoShop, which was just listed not too long ago. We are initiating with a buy recommendation and target price of 1 ringgit 51 cent. Let me start off with a brief summary on the key investment merits of EcoShop. I think first and foremost is definitely the beauty of a dollar store industry in Malaysia, which is pretty much in its nascent or infancy stage. If compared to if we compare the penetration rates in Malaysia against those countries with such industry, I think the flat price model of the dollar store has been very well received locally. And this industry has been growing very rapidly over the recent years. So if you look at the growth rate, it has outgrown the overall store-based retail quite substantially. I think the reason will include, I think, the rising cost of living amongst the people, hence the higher demand for value for money option. On top of that, faster income growth of the lower income group has also accelerated the industry growth, given that the low income groups make up 86% of the dollar store industry customers. According to Nelson study, you may be wondering what consumers like about dollar store industry, what's the attraction of this dollar store industry. According to Nelson study, number one consideration will be the affordable pricing, as most, if not all, of the products are sold at a flat price of 2 ringgit 60 cent at this moment. And consumers also think that dollar store offer value for money products. And in terms of product variety, is very wide. So it's very much a one-stop shopping destination for the dollar store customer. And of course, the quality is actually not too shabby, looking at the low pricing. So it's quite value for money, and this has been attracting a lot of footfalls amongst the lower income groups. As such, we think the industry has more expansion prospects or headroom going forward, given that, like I mentioned just now, it's very much still in the early stage of expansion. And EcoShop, being the dominant market leader in this space, is in good position to extend its dominant lead. It has got close to 70% market share at this moment. And with the aggressive expansion drive going forward, I think they will continue to extend its lead over the closest competitor. At this moment, EcoShop is three times bigger than the nearest competitor. And the key differentiation of EcoShop will include, obviously, number one, the larger network. Like I said, they are three times bigger than the nearest competitor. And they also offer a wide array of house brands, which account for about close to 60% of their sales. This is not something that other people or other dollar store industry competitor can offer at this moment. So the expansion plan is to open at least 70 stores a year going forward to further capitalize on the fast growth of this industry. And I think along the store network expansion, they will also be upgrading their distribution center to accommodate the expansion. In terms of valuation, our target price of 1 ringgit 51 51 cent will imply 31 times forward PE. This will slot in between the valuation ascribed to 99 Speedmart and Mr. DIY of 33 times and 25 times respectively. And we think this could be justified after taking into account the growth prospects, product mix on nature of each of the brands or players, and finally the ROE that they have been generating. In terms of downside risk, can't really highlight too many. I think business-wise it's pretty stable. And there's obviously a lot of headroom for all players to continue to expand. So what I can think of is probably reputational risk. For example, what happened to a KK Mart not too long ago can also happen to people like EcoShop. And at this moment, I think the company is focused on bringing back the volume after the price increases back in April this year, which is about 3 months ago. So current promotion that they are running would be the lower price for all of their F&B products at 2 ringgit 40 cent. So that is a strategy to bring back the footfalls as they are seeing quite a bit of slowdown in volume after the price increase. So all in, we initiate coverage on EcoShop with a buy recommendation and target price of 1 ringgit 51 cent. And the company will be reporting the fourth quarter 25 results next Monday. That's all from us this morning. Thank you so much for dialing in and joining us. Happy trading, and we will see you in the next morning kappa at 8. Thank you and have a good weekend ahead.